I'm Bob calling with Market Trader Tao, and today we're going to continue our series on chart patterns, and we're going to be discussing pennants and flags. Now, pennants and flags are fairly common chart patterns that you'll see develop on either uptrends or downtrends, and they are usually found in your impulse phases. Now, right here, you'll see our standard chart phase, and you'll have phase 1, phase 2, phase 3, 4, and 5 of a standard chart cycle. Now, on pennants and flags, you'll see them develop in your uptrends and also in your downtrends, and you'll see them develop on your impulse cycles. Now, these are your impulse cycles up, and these are your impulse cycles down. And this is where you're going to see your flags and your pennants develop, right here. They're temporary pauses in the market as the market wants to gain momentum, or pauses for a short period of time to gain momentum to continue on. They're continuation patterns. Very rarely will you see a pennant or a flag reverse. Now, we're going to take one of these and expand it just so that you can get a better idea of where they occur and how to expect them to occur. Now, in your typical up phase, you're going to see your pennants will develop as a rule in one or two places. They'll either develop here on the upper side or your lower side, and you'll usually have one or two on each phase of your impulse cycle. And a flag will develop, and they're relatively very much just like a flag blowing in the wind, and you're going to have a continuation on that flag. Now, a pennant is looks very much the same thing, but it looks more like an asymmetrical triangle, where you'll get your correction and then a continuation of the same thing. The difference is that you have parallel lines versus a symmetrical triangle development. Now, these work the same way in a downtrend or an uptrend, and they're a good place to make a decision as to whether you want to. These help you stay in. Now, typically they're very short term. If you're looking at a time frame, you can expect, let's say that you're looking at an hourly time frame. These will last about 7 to 14 time frames or periods, and they're very, very short in duration. Now, if you're looking at the dailies, you're still going to kind of expect to see the same thing. It's very important about time frames. You need, when you're working a time frame, whether it's a daily or a weekly or a 1 hour or a 15-minute time frame, it's very important to be consistent with the time frame that you're going to be trading in, and it's very that consistency will give you the edge when it comes to trading profitably. Now, there's not a whole lot to say about these other than you'll find them in a lot of different locations, but when you do see a pennant going on the other direction, you will see them. They'll look very similar to this, except that they'll be you will see a flag develop in the downward direction, or you'll see a pennant develop in the downward direction. Usually, you can expect to see at least 2 corrective tops on a flag or a pennant before they proceed downward. Now that's pretty much flags and pennants, and the next thing we're going to be talking about is wedges, and that'll be in the next series. Wedges are very similar, but they're confused a lot with triangles, and but they're not triangles, they're wedges, and we'll be discussing that in the next series of videos.